And perfect timing to start the Friday pre-market rundown. How's everybody out there? Hopefully you're having a great week. Hopefully that you are making some great trades. And this is all about technical analysis and all about some of the indicators that we have over at TriggerCharts.com, available on the TradeStation Trading App Store. I'm Andrew Horowitz. I'm one of the co-founders of TriggerCharts. Thank you so much for joining me this morning. Of course, all of the discussion we have today will be on both TriggerCharts.com as well as our YouTube channel. You can check out this week's, last week's, and a lot of training that's available on Trigger Charts indicators that we're going to talk about. A couple things I want to mention to you before we go. I'm going to put some things in the chat. Make sure to watch your chat down there. There should be a couple of things in there. If you have any particular stocks that you want us to discuss, well, put it in there and we'll do it. I'll also mention this is for educational purposes only. It is not an offer or a recommendation to buy or sell any security. Anything that we talk about should not be construed as a recommendation in any degree, in any light at all. So make sure you understand that. And if that is good to go, okay, a couple of things mentioned. Just to tell you again, we are the #1 highest rated, #1 overall app in the trading app store at TradeStation. And there's a reason for that. And the reason is that, well, this actually does some great work. It provides for great trading indicators, trade biases, long side, short side, when to stay out, understanding when not to be short, understanding when not to be long. We do that with some very simple color and keys that are involved in the indicators. Like you're looking on the right here of this particular chart for gold. We see that, you know, we went a bias to the long side with gold right about 1579. And where is it now? 1643, doing pretty well. So let's kind of do a little bit of a roundup, a little bit of a discussion of some of the things that we're talking about today. And, well, we have all of a sudden, markets are concerned. Seems like the coronavirus and all the issues surrounding the global economic condition didn't really matter, or if they did matter, it was temporary. Well, all of a sudden, we're starting to see some concern. Yesterday, we had a big drop in the morning out of nowhere when we saw that Beijing hospitals and were starting to get a tick up in the infection rate. We also saw that it is spreading to South Korea, Japan, and other areas like Singapore around Asia. So there's a big concern about what is really going on with this coronavirus. And in particular, what we've been talking about and looking at on a regular basis is that this is not going to end anytime soon, because the spread and infection rate and transmission mechanism of this particular virus is such that the incubation period is about 2 weeks. And during the initial phase of that incubation period, there's not a lot of indication. You may not have a fever, you may feel okay, but you're infectious and you can pass it on to others. And it's a respiratory disorder. It's killing about, I think, upwards of 2 to 3% of the infection rate as we know it, although that may be skewed incorrectly. We're not exactly sure of the counts because we're not sure we can actually trust the Chinese in terms of what they're saying in terms of their counts. But one thing we do know is that about 50 million people are quarantined. We are seeing a slow opening to the casinos in Macau. The manufacturing that goes on, in particular with technology in the center of Hubei and Wuhan, are constrained at best. We're seeing that companies are coming out with some indications of this as well. Apple came out with an announcement that they're going to see a shortfall on their revenues. Yesterday, we saw a report that maybe 40 to 50% of iPhone production can be halted, and has been halted since pretty much the beginning of, let's say, the mid part of January. So talking about 4 weeks already. That's pretty substantial. And 50 million people unable to work right now, unable to really go out and buy things, go through services, restaurants, do the things that they normally do, is the equivalent pretty much of, I would say, the entire East Coast of the United States being shut down for a month. That wouldn't be good for GDP. Japanese GDP, Japan's GDP came in at a -6% annualized this year for the last quarter of last year. Looks like it's going to be just as slow. There is some indication that possibly we're going to see another about 6% down drop or drop down in the print from China in this quarter. So there's a lot of things that are going on that are very concerning around the world. Meanwhile, markets here in the United States were relatively oblivious to this for the last few weeks as we saw new highs hit. But we are seeing the companies acknowledge this situation, and particularly it started with Apple. Goldman Sachs is out with an update and opinion. They view that markets are really not pricing in what's going on, the severity of the situation inside of China and in Asia. And the potential slowdown that we're seeing is starting to show through in some things like oil prices and commodity prices. And whether or not this is going to be able to be solved by the massive stimulus that is being poured on by not only the central bank in the United States, but China is reducing the reserve ratios, loan rates. They're pouring on about $10 billion in all sorts of stimulus. Markets are reacting favorably to that. We did see a V-shaped recovery in the Chinese CSI 300 shares. Question remains, how long can that stimulus really help to prop up the companies? Because that's a financial move in the markets rather than a fundamental move, with the underpinnings of much of this being concerning. So something there that we have to look at. And again, we've been talking about this whole idea of it's not over. It's not over. Last week, the week before that, this is not over. This situation is going to be elongated probably into the second quarter of this year. Even though stock markets may think, well, there's not a lot going on, earnings are going to be a major key. And when companies come out with their guidance in the next quarter, we're really going to get a great insight into much of this. Again, Apple came out with their announcement that their revenues were not going to hit their guidance. Stock was down about 2.5%, 3% that day. And then miraculously the next day came back like nothing happened. That's all a product of ETF flows in the passive investment side. It's a product of just the buy the dip mentality. It's a product of buybacks. And more importantly, it's a product of very low interest rates. The 10-year, the 2-year is inverted against the 5-year, up a couple of points above, I think 138 to 135 on the 2.5. The 30-year Treasury in the U.S. is now dipped down to 1.94% overnight. So the idea is that stocks can look relatively reasonably valued in this condition because they're doing a comparison with where we are with interest rates. But there's a difference between low interest rates due to a flight to safety and low interest rates because central banks are priming the system and buying all the bonds that are out there. You have to figure out which one it is. Right now, it's a clear flight to safety that's really causing a lot of this. Dollar is ticking up, which is really interesting because the yen should be oftentimes the flight to safety currency that's used. Somehow the dollar continues to move higher. Economic reports, we are seeing that housing has popped up pretty nicely. We'll see some more next week, but we're seeing that housing starts saw a good move. China is at an absolute standstill. Talked about the GDP of Japan, and the PPI, the producer price index that we saw this week, ticked higher. Annualized rate close to about 6%. So while we're considering no inflation, something is going on in the last report with the wholesale inflation number. It hasn't shown up yet in the CPI, but next week we have something coming out that may actually show that. I mentioned if you like some of the things we do, a similar style, a little bit of a difference, can be used as an adjunct to some of the indicators we have, is the anchored VWAP. The anchored VWAP is brand new. It's from AlphaTrends, made famous by Brian Shannon, a good friend of ours, and we decided that we would team up with him and distribute the anchored VWAP, an ability to just simply point and click a anchored VWAP, a volume weighted average price on any time frame, on any chart, to see where those levels are. And it works very nicely because you can find consistent areas where there is support or maybe resistance, and you look at that when you consider things like our autopilot, which is on the right-hand side of this chart, our altimeter lines. When you see that there may be some identical levels, that could be really good, strong holding points. Let's close that. Earnings, we saw big moves on Stamps.com, Expedia. We saw, did you see? Domino's Pizza yesterday, all-time high, ramping higher. I mean, it's pretty interesting to look at that when you think of it as doing much better than Amazon and Google, for example. That stock has done incredibly well since its IPO. I mean, ridiculously well. Better than Google, better than Apple, but it's amazing. And we have to look at Zillow came out with some numbers yesterday too. I don't know what's happening there. Okay, next week we have economics. We have new home sales, durable goods sales, the second reading of GDP, and PCE prices. PCE prices are the preferred metric of inflation by the Fed. So with that, it's going to be interesting to watch what's going on with that. Crude oil did pop up. We did see that a possible OPEC. This week, we have a guest on the Disciplined Investor podcast. If you're not subscribed to that, if you haven't listened, we have a great guest. Matt Smith from Clipper Data is going to be on with us this week, talking about oil and all sorts of things related to some really cool areas of the oil market and what to expect and what they expect for oil flows throughout the year. We talk about a whole range of subjects. That will be out this weekend. But the Disciplined Investor Podcast, get it over on iTunes or any other particular area that you get your podcast from. But oil, and we have gold. I mean, gold is really, again, a flight to safety. Is showing us that there is more to this because the dollar is rising. It's not a dollar trade. It's nothing more than people are looking for a place to go to hide out for a little while, and commodities have been pretty decent. Just to get back to crude oil for 1 second, we'll show you a chart in a second, but crude oil dropped down to some support right about the 49-ish range and then popped back up. Even though there is a glut of supply right now, even though demand is very low, the fact is we have some initial grumblings already, as we see very often, from OPEC saying, you know what, maybe we have to talk about production cuts. And that is getting more play than the actual level of inventory that's currently out there right now. We're going to look at STMP and BEV, CL, Space, all the names that are moving. I asked this last week, but I want you to let me know this. Did anybody get a piece of this Virgin Galactic SPCE that we've been talking about, I would say, for the last, I don't know, 6 weeks or so? Stock has been on just a vertical tear, came down a little bit yesterday, popped back up, down a little bit today in the pre-market. We'll see how that plays out. But the altimeter and the autopilot were spot on. I mean, and this is a stock that was really just doing nothing. And then it caught on as a craze, but we caught it pretty early in our indicators. I want to go to, let's take a look at what I want to go to. KRI, the KRI indicator, we see that it is a +1, but we did see right down here towards the bottom here where you're looking at this, that there was a couple little moves to the upside, and we got a little bit on the overbought. We got some coloration that was getting towards the orange and red, and you see that. And when you see that, you have to realize that there is the potential for a roll, and you can see this in the past. You know, we got some little bits here and a little bit of rolls and some moves here, some reds, and then a few days down, did roll down, got back to the zero line. Wasn't so overbought that it was really that concerning. We weren't seeing a +6, a +7, we're seeing a +3, +4. Those levels resolved themselves pretty quickly. As you look at this, just that sell-off yesterday, which was kind of minor, took it down to only a +1 again. We're seeing that on the top right here as well, where you're seeing that the gauge that we utilize for this is that we're near equilibrium. It clears up very quickly. Oversolds do the same thing. You can look back here where we got that level that was a buyable event down to the -4, -5 line. But we're not really seeing that now, so really markets are resolving pretty well, pretty quickly when it comes to their levels of overbought and oversold. So let's get to some stocks and some names. Stamps.com, really interesting. This is a bizarre looking chart, but one of the things that's really interesting to notice, I'm going to kind of zoom this back a little bit. Take it back a little bit. Always go backwards and look where we were in historical reference to see exactly kind of where those gaps, those holes are, and what this looks like. One of the things we do know about Stamps.com, it's a very low float, high short interest. And what we saw was a breakdown after they lost the U.S. postal deal from about 200 and, I don't know, what is this, 205, came down to about 97, broke down again to about 38, went all the way down to about $33 per share. Did a nice climb back up. We saw the aileron started moving positive. We saw this really nice move here, got into the position at about 57, closed it at about 75. We got a little bit of wonky moves, consolidation very tight overall. And then we saw that break on the higher note and kind of went back and forth. Nothing moves. This was kind of a questionable level here. But look at this. I want to show you this on the end here. This was a call to move long in the positioning of this, and it was pretty much right about here. Can you see that? Right there, we had that yellow line, that alert, that long bias alert that came up. And once you got over the level, I would say, of about right there, so you did close that, you had smooth sailing because you had pretty much nothing going on. There was nothing here. Look at this whole range. Nothing to stop the move. Now, granted, it was a move yesterday, about 67% up, that was based on better than expected earnings. So with that, you know, that was really hard to play that. But if you did take on this position on the break above a very significant level, which, and I'll draw this for you because I think this is really interesting. I think that what we have to look at here is this level here. And what we see is right about here. Okay, that break up the day before where there was nothing above it, right? There's nothing above this level here. That was a pretty good level to start thinking about accumulating shares. That was pretty good. That moved very nicely. And then you got this incredible move higher on this. So stamps.com, very thinly traded, like I said. This was an earnings move, so just something to consider. NBEV, I thought this was interesting to look at. This is a CBD infused product, a soft drink, if you will. That's what they are working with, new age beverages. We got above a level that I think was pretty important, right about $2.17. This is a small, very widely trading. We're seeing that the aileron, which is good, the aileron levels are pretty much nicely above the zero line, which is very good to see. A few different areas of overbought. See those little dots that are appearing on top of the aileron. But we are seeing that that nice base that formed on the bottom was broken to the upside. In other words, the base resolved to the upside, held very nicely at the 180 level, and then started moving higher. So you have a range inside of here that there really was nothing. It moved up through that yesterday. And now what we have to do is pretty much just clear the next level. So let's back this up a little bit. Let's get to the area that we want to find. So when I look at this, and I'm going to take now the line drawing tool here, we have a couple of levels that are pretty important. I think that really you have to kind of break above somewhere about we'll call it 275. Didn't get there yesterday. As a matter of fact, stopped dead on the tracks of 265 yesterday, 263, 65, where we had that move, and it was overhead resistance that was very significant. Now, with that in mind, you have to realize that where are we going to go from here? Down a little bit in the pre-market. Any good news in the marijuana stocks, pot stocks, weed stocks, whatever you want to call them, the MJs, that's going to be pretty good for this name. And they've really been depressed for some time. And if we're looking for alternatives to some of the names that are out there that have seen a major run-up, valuation moves that are ridiculous, and maybe a speculative trade, something to just consider. Crude oil. Crude oil is still not back up, but look how it held this. This is the daily on the crude oil. Got, you know, kind of 49.80s, held very nicely below there. A little bit of a potential for a banger trade, but not quite there. What I mean by that is we really didn't coincide with the move on the upside until a few days later, confirmation, and it really took some time. We're trying to resolve off of this trend that was lower, clearly. We are finding that there is some support and, the resistance right about the 53 and change mark, right now trading right at 52.99 in the pre-market or in the markets right now for crude oil. I don't know how many of you play futures, but this is really interesting to look at because I think there is a level of, I think about I would say about 54.25, where you can see a real reversal to the upside where there's not a lot of congestion. There is some congestion in this area, but we're still seeing very wide areas. See how wide these areas from here to down here on the altimeter? So the range of the altimeter is really wide, not tight like we saw, for example, with stamps. That being the case, the potential for this to ride very quickly above, if we do break resistance, it's going to be pretty significant. I'll mention to everybody that if you want, you can write an email to support@TriggerCharts. There you go. Support@TriggerCharts.com. Sam had a question regarding being interested in the products. There was a couple of others in there that had some questions about what's the best product for you from all the things that we talk about, the best indicators. Is it the aileron? Is it the altimeter, the autopilot, the commander series? What is it? If you want to write there to support@TriggerCharts.com, we'll give you some insights, maybe what is the best thing for you. Gold, we talked about a little bit, just right off of that top again. Saw this beautiful, beautiful move on the upside from about 1487, traveled beautifully all the way up. Had that green. Green means that's a buy, right? That's a long positioning. If you look on the top here, you say that there is, on the short term on gold right now, we take a long profit, but we see long. And on a weekly basis, we're seeing that this is a long alert too. So from the very longer term, we look from right to left always. From the long term to the short term, there's a pretty good level of interest in gold here. So we did see this breakout from the 1577 level again. Right now trading at 1641. That would have been a pretty substantial trade overall. If anybody of you trade gold, you could trade GLD, or even if you want, you could look at something like a GDX. Let's go to GDX. Not participating as well as gold, but there is a stock on here that had been participating, although started to fall off. This is really interesting to see. We're seeing that Kirkland Gold had a pretty much bad day yesterday after the earnings, even though the earnings beat dramatically. This is tied pretty much to gold, and gold prices going up. You have to wonder what's happened here. It was just a general sell-off of commodities, the concern about buying from places like Asia. But if we do see any kind of leveling off here, there is some potential. I'm not really a fan of this chart right now. I like the fundamentals of this company. There is some support maybe down. We got to kind of really look very carefully. You know, the support probably is down by, I would say, about 31.30. There's a little bit of intermediate support right about here, about 35.25 or so. But you see that we see a change of trend that we saw very recently that is starting to take the aileron on the downside. Expedia came out with earnings. Terrible chart. Gappy, holy, nasty, moving around way too much here. When you look at this, there's these gaps on this, and it's very easy to see that on the chart, especially when we color it black in the background and then clean off all the extraneous data. What we find is that there is a pretty good way to look at this. And I think that when you really kind of look at some of these levels here, and you see that we had this just horrible move down. The short resolved, you got in somewhere around here, resolved out, closed out about 100, saw some basing out, a bit of a move to the upside. And now a consolidation, then a break. This is not a stock that I think is really playable. There's too much wonkiness in the chart. There's too much uncertainty in the chart, trading around way too wildly. Not a lot of confidence that I would have in that trade. What else we got? Oh, DPZ, Domino's Pizza. Let's take a look at this on a weekly basis. This is pretty unbelievable. Look at this chart. You know, this chart was you were $80 back in 2015. 2019 didn't go anywhere, pretty much traded in a range in 2019 on a weekly, and just bam, flew higher. Valuations are a question right now, but generally speaking, there was really nothing you could do right here except for hope for that the earnings would come in well, and you go back a number of months and you had this level that you could just draw a line across and see that there was a lot of resistance at that level. And once you saw that earnings come in better than expected, well, it just slammed higher. So pretty cool on that. SPCE, I talked about this earlier. This is weekly. Let's go back to a daily. And you can do this whatever. If you want to do a 60-minute chart, if you want to do any charts available, loads very quickly. We've optimized this to load very quickly so that you can quickly scan and utilize this. But let's look at this. I think this is a pretty cool chart because we haven't seen really any outs. If you would have gotten in, let's say, way back over here, there was a buy at about $10. It broke up. It held its support, got out a little bit, got back in on the yellow, which is an alert to start considering long. The next bar that comes up, if it does close on a yellow, it will come a green or red, showing you the bias is either short or the bias is either long. And we made it really simple. This is color-coded. I need it simple. I tell you this all the time. I need it simple when I'm scanning through hundreds of charts. I want to see what's going on. I want to be able to eyeball it. Color coding seems to be the easiest way to do it. And we utilize the chart. And more importantly, we have up top here, we have all this going on. This coordinates very easily because you could load 500 mini charts inside of here. Any names that you want to put in here. And what happens is that you get the bias and you can follow along from right to left. Okay, long, 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 short, or whatever it is to find out where that confidence level is. The more we have the long-term trend in one direction that confirms with the shorter-term trends in that direction, the better the trade possibilities are for that trend to continue. And in this case, again, we had a couple of ins and outs, but got you right back in. Didn't get out, but it got out here. Saved you a couple of bucks, then ramped from about 24 to 42. So all told, this is about a 200% plus profit if you just follow this. And what was nice to see is on the bottom here, the aileron is starting to change and get a little bit concerning right now. Right now, pre-market, we're down 9%. There was a Barron's article that said, hey, you know what? Maybe the valuations are in question. I don't doubt that. But we just got to follow what the chart is saying here. We're probably going to get a new altimeter drawn sometime very soon on the daily here, and that's something to watch for. Right now, it looks like buyers are coming in at any level. We did see that major sell-off to the bottom yesterday and pick back up to pretty much even to close the day. So we're really not seeing a significant amount of concern yet. There will be a day this will dump pretty hard. You just don't get these run-ups and go straight to the moon. So watch for that. Let's clear all this. I had a feel apron, blue apron. Yeah, just horrible, obnoxious, nothing there. IntelliStat's interesting. IntelliStat, if you look back here, dropped down after there was a potential auction for some of the C-band. We'll leave that aside, what was actually going on. We saw that drop from a 23 down to about 6. There were some other concerns about bankruptcy. Held that $3 level at $4 right now. But look what I want to show you here. What I want to show you here, this is really what we want to focus in on. And I want to kind of draw a box. I love drawing my boxes, you know that. But in this range, if we get above this range here, you have the potential to get back to $6 very easily. And any news on the vote or how this particular band, this communication band, is going to go through the airway, the airway bands of the, I think it's a C channel. I may get that wrong, but there's the whole spectrum issue going on with this company. And if, in fact, we get some kind of positive numbers or not so bad numbers out of any vote that goes on, we may see that this thing does pop back up to about $6. Somebody asked me about Chegg. Let's take a look at that. Chegg's been in a nice buy. It's been in a beautiful move to the upside. Trend has been good. Trend has changed a little bit here. I think that you have support down about 37.50 right here. Came out with earnings recently, dropped down on that, tried to make an all-time new high, came in. We have a little bit of an island that is forming right about here. And with that island, you have to be careful because there's not a lot when we look to the left. When we look at where we've been and where we're going, if we kind of start drawing there's not much down to about this level there. So it's something to consider. Got a couple others before we finish up here. Let me kind of get that. Get one real quickly. OIH ETF is the Vector Oil Services Index, been falling down. There's a couple of them that are very similar to this that look really kind of troubling. We have support here in the area of about $11, so that's good. If we go back a little further, you have some pretty good support here. Would I play this? I think I'd really like to get about 1148 to really get back in this. Looks like some false breakouts happening on this. But that's how easy it is to read this, right? You can just look at this level, draw a line, see where we are. See, you got to get above this level where there's not much going on. And then you got more resistance at 1187. 1187 is a really good number. If you get above that 1187, 1190, you got free sailing for a while, all the way up to about 1250. We got a couple others here that came in. What is this? Anakova Therapeutics. I would say you have to get about over 70 cents a share for this to really start flying. It can happen very quickly, and then you have some upside resistance, I would say in the $1 range. So that's a nice return on this. I don't know how actively this is traded. I'm not sure what the volume is on this, but that's something that's interesting. I prefer to look at some things that have a little bit more, volume and a look to this. Here's another one, Reed. I mean, I'm not sure what we're seeing here. This is a pretty bad, dastardly downtrend. You have this 112 level, break that. You got kind of all this interim support. Reed could move. You're starting to see this turn around. You're starting to see the aileron pick up. This is interesting. Do I think that they would break? Well, you got to get above about 125. And then, again, you got a lot of little resistance levels here that are concerning. $2 is the level that we could start launching back up, but not a lot of upside, in my opinion. Vuzi. You could break, you could go up. I mean, there's some good support here down about 178. Aileron is showing a real bad trend. Not really that great. The other one that I think somebody said was Beyond Meat. Beyond Meat's interesting. If you get above this level right here, about 125, there is the potential for you to move immediately. And this thing trades very actively. So that's something to take a look at. And I do think that that is something that you can play. Be aware, though, that it does have a lot of volatility. There's this gap area going back to this area here. I would really like to put my chips on the table, kind of above 126, I would say. That would be a level that you can see where this island that's kind of forming right here, starting to come up with multiple levels of resistance 121 in the pre-market, currently trading at 121, 124, 125 is your breakout point, moving that up to the next level. We're going to end it right there. I want to thank everybody for joining us. Check us out on the YouTube channel. A lot of tutorials available also on TriggerCharts.com. Make sure to get your indicator. You got a 10-day free trial over on the TradeStation Trading App Store. So thanks for joining me today, and I'll see you again next week.